Okay, you're welcome once again. I'll be taking us through Trading Psychology 101. Trading is a wonderful thing, but you got to put a lot of pieces together to scale through. So today I will not be speaking about technical analysis, fundamental analysis, or risk management, but I want to focus more on the psychology aspect. Because to be honest with you, even when you have a lot of factor in place, a lot of piece properly tailored, and if your psychology is not actually fit to size, you will still make a mess of yourself. You make a mess of your capital. You will frustrate yourself. Um, lot of times you feel desperate. You feel a lot of negative things, and you see yourself bombing yourself with a lot of whole lots of negative emotions, and you might head on into revenge trading or trying to squeeze out opportunity that doesn't exist in the market, thereby indirectly making you to lose more and adding to your said trading agony. So let me quickly go into the business of the day, trading psychology 101. I want to start by saying that you don't need stressing yourself on trading psychology if you have not found an edge of play on the market. Yeah. Trading psychology is not going to do the magic for you if you don't actually have an edge of play in terms of technical analysis. In terms of if the market does A, you will do B and expect a C in return. In terms of if the market does X, I'm going to take the Y step expecting a Z in return. So if you don't actually have an edge of play, something you have verified over a large sample size of trade, something you verified over a large sample size of trade, believe me, if you don't have an edge of trade, you don't have any business paying a whole lot of attention to trading psychology. Even if you do it for the sake of fun, but trading psychology is going to pay off. It's going to pay the more if you actually have an edge of play in the market. Okay, so I'm in the light of that, I want to boldly say this. You know, it's something that is difficult to accept. As a trader, you always want to be right. You want to get it right. You want your play to be right. You want your guesses to be right. Well, you can't always be right every time, even if you can. Most times, at times, sometimes. Why? I will always say the market is a reality on its own. It's an entity. So, well, as a matter of fact, the market is always right. The market corrects your wrong play with a loss, and be grateful enough to accept it. When you are wrong, you are wrong. You take your stop loss and move over to the next trade. So the next thing I want us to know is that any trade can end in loss. Any trade, regardless of the setup, regardless of the technical analysis whatsoever. It might look like a 70%, 95% accurate setup. It can still end in loss. It can still end in loss. That's the truth. Any trade can end in loss. That's why before you click the button of buy or sell, the first thing you should determine is how much you are willing to risk in a trade that aligns with your edge, to find out how it plays in the long run. How much are you willing to risk in a trade to find out how the trade is going to play in the long run? You know, sometimes we just think we just click the button and the market will just obey you. Definitely, wow. Wow, it doesn't work that way. It doesn't work that way. For someone to buy, someone should be selling, and for someone should sell, someone to buy. In trading is a zero sum game. That's the first thing you must be at. Is a zero sum game. Honestly, it's a zero sum game. So, a lot of persons when they go to the social media and see what's actually happening there, the display, the pumps, and the big flamboyant lifestyle, those loud lifestyle, that is being expressed by some fellows who claim to be traders and this and that. Those pictures or whatsoever is actually painting the trading, the trading or the art of trading to be something that looks like a get rich quick scheme, but it's not always true. It's not true. Actually, trading can make one rich, but it's not a get rich quick scheme. It takes a lot of refinement and definition of oneself and one's edge and one's understanding of oneself and the market to be able to scale through certain heights. There are people that have actually been trading this market for years, for decades, and they are still enjoying it. And as a matter of fact, the only thing they can boldly do with all their life is just trading. So it is as a result of you coming to terms with the reality of the market and you coming to terms with whom you are and how it's going to fit or play with the market environments, with the trading situation, trading environments, or the trading scenarios that you meet. In short, I keep saying this, that a trader literally lives in uncertainty every day of his life. You the outcome of a trade, the outcome of a given trade, maybe you took now, with the next one is never related. One can be a loss or profit. That you took a trade now and it ended in profit does not mean that the next one you're going to take will equally end in profit. That you took a loss now does not mean that the next trade is going to be a loss. That's why you must be willing to execute your edge, your system of gameplay, your strategy in the market with no fear, but be probabilistic in approach. Yes. You see, if you've actually defined your system of play, your strategy in the market, your edge, all this grammar is just meant to describe what I'm trying to say. If you've actually defined it, the moment you see an opportunity that aligns with your edge, the only thing you just have to do is, how much am I willing to risk? Contain your stop loss and pips within your risk and take the trade. Take the trade. If it hits stop loss, fine. If it gets the profit, fine. If it breaks even, nice. It's a trader that has actually understood himself or herself does not does not contemplate until does not contemplate because of the effect of past trade, or he or she does not permit the effect of the past trade to hold him or her down from executing their edge. They do that with confidence, fearlessly. 70% of trade you are going to take will be subject to or involving chance variation. Actually, no two trades will actually be the same. They are not going to look like the same thing, definitely. No two trades are going to be the same. I'm looking at a Euro USD now. Anything can happen. Anything can happen. Anything means anything. So, how are you willing to cope with this environment, with this trading environment that is studded with variation and probability? That's why I said 70% of trade you are going to take will be subject to or involving chance variation. They may not necessarily be the same thing. That's why your edge should be systematic, should compass a lot of things, should encompass a lot of things that is actually in, should I say, in good tiding with your personality. You don't just get an edge of play that ruins your psychology. You get something that is in tandem with your kind of person. It is uncommon for two trades to play out in an exact pattern. That's why you are to risk what is comfortable with your equity. Your risk should be monitored and predefined. It's not something you after clicking a buy or sell you start monitoring. No. Actually, this is not about risk management, but I'm trying to tell you something that how psychology is to some extent intertwined with risk management. Because if you make a mess of one thing, you've already messed the other thing. Imagine you now risking, like, let me say 30% of your account in the trade, and the trade just went bizarre. You looked at your accounts, your equity, to that it's actually bleeding in red, negative, a massive drawdown. How are you going to cope? How are you going to cope? No. That's not how traders do, because you've already ruined your psychology. For the next time you come into the market, you have this kind of indirect urge from within you to try to make up for yesterday's losses, the previous losses. And in a bid to make up for those previous losses, you see yourself using oversized lot size. And you don't know how those trades you are taking will equally end. Sending your account again into another bleeding pool. Sometimes when you emotionally you have this kind of quest to meet up or make up, that's one of the best moments you see yourself ruining your risk management, your edge, and your trading psychology. So, and secondly, I keep saying this: you can't use a trade to judge your edge in the market. You need to see how your edge plays out on a wide range of sample trade. E.g., after taking 20 or 30 trades, you can just take maybe one or two trade and you say, oh, this edge is not working, this edge is not profitable, or this edge is working, this edge is profitable. No, take trades with that same edge of play on like 20 to 30 trades and see how it plays out before you should be able to say this edge of play is excellent or is nice, or at least it has so and so percentage of win rate, if I can continue with it, or if I should do one or two tweak or maybe change it. So you can't just take one, two, or three trade and say, oh, this is a very profitable edge. No. Take time, back test, forward test, confirm what you are doing, and see how it plays in the long run. After 20 or 30 range of trade, you should be able to know, wow, this is an excellent market. This is a profitable market. This edge is excellent for so and so environment. An excellent or an edge an edge of play that seems nice or profitable to you does not mean that it will shield you from hitting stop loss. With time, you'll be taken out by one or two stop losses. But the fact that it hits stop loss does not stop you from being positive or being in profit. Yeah, maybe out of 10 trades, 6 were profit and 4 ended in loss. Yeah, you are still profitable if you have a nice risk to reward ratio, 1:3, 1:2. Sometimes those high risk to reward ratio can be profitable. It can equally not be profitable, but sometimes over the long run, it may not be to some extent realistic. That's why when I come to teach on risk management, there are so many things you have to know: how to cope with session trading, moving off stop loss, breaking even, and how to move your stop loss in tandem with market structure. It takes a lot of piece to be sewn together to have a nice trading apparel. So it takes a lot of piece to be sewn together to have a very nice outfit that is well patterned for the market. At least it will help you survive. It will help you survive. It will help you go through the thick and thin. It will help you go through drawdown and not still be blown out. So just believe me, you can do this. You can do this. You can. I believe in you. You can do it. Keep on keeping on. I'm doing my best to simplify the art of trading, the science of trading as much as I can. Believe in yourself. You can do it. Thank you.